Hey, what's up, guys? Good day and welcome back to Work Smart Industries TV. It's good to have you guys back here. Today we'll be talking about volume and relative strength indicators, and we'll be looking at a new token known as credit. It's an infrastructure-based token, so I'll just talk about it a little and read an article to you. It's going to be a short video, straight to the point, so just stick around and enjoy yourself. So, 1 second. So we've been doing our crypto trading course for a while, and we are currently at technical analysis and its components. So previously we talked about channels and trading with channels and all that. So today we'll be talking about volume and relative strength indicators. What's volume? Volume is simply the number or amount of a security that has been traded over a given period of time. It could be a day, an hour, 4 hours, or a week. But it gives you an idea of how much of players have been in the market in relation to this token and how, or this token of security. We are talking about cryptocurrency trading, so most time I might interchange the word security with token. So volume is simply the number of a security that has been traded over a given period of time, usually a day. It's a very simple but important technical indicator, but most technical analysts ignore it. They don't take it important, but its importance cannot be overemphasized. Volume charts can be analyzed to show trends of increasing or decreasing volume over time. Oftentimes, volume is expressed as a bar chart directly below the price chart, with the bar's height illustrating the amount of the security traded per period. I will show you this on live chat so you could see exactly what I mean. Okay, so this is just a picture showing you where volume is located on the chart. So this is a price chart showing the price of a stock. I got the picture from stockcharts.com. So you can see volume being identified as these bars at the bottom of the chart. So this is the volume within the rectangle. Why is volume important? Volume is used in, there are many reasons why volume is important, but I could come up with about 3 of why volume is very critical. So number 1, volume is used in technical analysis to confirm trends and chart patterns. What gives credence to a trend, or what gives credence to a particular trade setup you see on the chart, is the amount of volume supporting it. So the strength of any given price movement is measured primarily by the volume. For example, if the security is trending upward and the volume is trending downwards, you know that there is not enough volume, or there are not enough players in the market supporting the movement of this token or the security. So as I gave in the example here, the price of a security may be trending higher with declining volume. This is an indication that the trend is losing momentum, and traders look out for reversals or sell out some of their positions. The concept whereby the price of a security trends in opposite direction to any particular technical indicator is divergent. So when you have maybe the price of Bitcoin trending upward, and maybe the relative strength indicator or any other technical analysis indicator trending downwards, you call that concept divergent. Normally what you expect is the volume should support the price, or the technical indicator should support the price movement. But when they move in opposite direction, it's known as divergence, and it's an indication of a possible reversal, because the price usually follows the indicators in the long run. So if a price is trending upward and the indicator is going downward, eventually the price goes downward, and vice versa. So that concept is known as divergence. There are 2 types of divergence, positive and negative divergence. I think you should check that up. Secondly, volume is highly important when confirming chart patterns. In our subsequent videos, probably the next one, we'll be talking about chart patterns such as head and shoulders pattern, cup and handle, double top, double bottom. These are trade setups you see on the chart, and that makes you take a position. What makes them important, or what confirms them, is the accompanying volume. So if you see a beautiful trade setup such as a double bottom, let's say Bitcoin, the recent dip of Bitcoin or the recent sell-off of Bitcoin led to a dip of about 6,000, or I think 6,300, about that. So if Bitcoin dips to that particular price again and comes up, it has formed a double bottom, meaning it has touched 6,300 two times, and it's usually an indication of a strong bull run to come. So if this happens on a day where Bitcoin volume is about $1 million, it doesn't really give any strong indication of an incoming bull run. But if it occurs on a day where Bitcoin volume, or if the volume stays pretty reasonable and you have a trade setup such as a double bottom, you know that you're in for a strong bull run. So volume is highly important when confirming chart patterns such as head and shoulders, cup and handle, double top, double bottom, etc. Chart patterns try to confirm pivotal movement. They are, however, useless if volume is not present. Thirdly, volume goes ahead of price. I think I mentioned this earlier. Price is preceded by volume. So if there's an increase in volume, there's usually an increase in price that accompanies it. And if there's a decrease in volume, there's usually a decrease in price that accompanies it. So finally, and very importantly, note that price is preceded by volume. A downtrending price with increasing volume is about to reverse, and an uptrending price with decreasing volume is also about to reverse. So that's that about volume. We'll talk about relative strength indicator briefly. This is one of my best technical indicators. I call it demand and supply indicator. It's one of the easiest technical indicators to use. What is RSI? It's a momentum oscillator that measures the speed and change in price movement. It oscillates between 0 and 100. It's an indicator that shows if a particular security is overbought or oversold at any given time frame. I call it demand and supply indicator because it gives you an idea of the demand and supply activity in the market, how much of buyers are available and how much of sellers are available, and which of them is more. And if the security has been currently overbought or oversold, there are different time frames on the chart. There are hourly time frames, 4-hourly time frames, daily time frames, weekly time frames, and even yearly time frames. All these will give you different information with regards to the relative strength indicator, since it tells you if that security is overbought or oversold within that time frame. What I mean by that is Bitcoin might be overbought for today, but might be oversold for the past 3 months. Yes, in January or in December, Bitcoin was trading at it got to a high of about $19,000. And today it's trading at about $11,000. So it might be currently overbought for today, but on the monthly chart it will be oversold. Nevertheless, relative strength indicators gives you a good entry point. So if you feel you want to buy Bitcoin now based on some of your other analysis, you can come to the daily chart and look for a point where Bitcoin is oversold and you buy in and wait for it to rise up. But basically, relative strength indicator is very simple to use. If something is overbought, you want to sell, and if something is oversold, you want to buy. So I told you it oscillates between 0 and 100. Overbought is when it's above 70, and oversold is when it's when it's below 30. So let's go and see some charts so we can see what volume and what do they call it now? Relative strength indicators look like on the chart, and what information they have to offer us. So this is a chart of Bitcoin against the US dollars. Okay, this was from my previous tutorial, so I'll just take it out. 1 second, please. Remove. Okay, so we are good to go. So this is a chart of Bitcoin against the US dollars, and you can see volume being indicated by this chart here. Let me just draw a rectangle to make it easier to comprehend. So this region of the chart here, marked by this rectangle, is the area showing volume. As you can see, there are just bar charts here below under the price chart, which is above, indicating volume. So I want to show you something critical on this chart. Let me take out the rectangle. Okay, you can see this green candle here. This green candle shows massive incoming volume on a day when Bitcoin had just finished dipping from this high to about $7,000. On the next day, Bitcoin moved just from about $6,800 to about 7,700, but it was accompanied by massive volume. If you used this volume bar as a buying opportunity and you bought at this point, that was on the 6th of February. About 1 month later, which is today, 4th of February, you will be sitting at about, I think that's almost about 40% profit or 50% profit in about 1 month. So you can see the importance of volume. Volume showing you a spike in volume followed by a spike in price movement. As I said earlier, volume precedes price. So after this spike in volume we saw on the 6th day of February, where Bitcoin was just about $7,000, there was an accompanying spike in price in the coming months to about 50% of that price. If you go back and examine this volume chart, which I'll encourage you to do, you can just visit tradingview.com. They have a free version and a paid version, so you could use the free version and just take your time to examine this chart and see the relevance of this massive volume movement and massive volume drops and their relation to price changes. So this is how you can use volume. It's very critical and you should use it in your trading. So below here is relative strength indicators. By the way, if you don't find it on your chart, you just right click and click on insert indicator, then you click on relative strength indicator and it will be there for you. So this is relative strength indicator. I'm sorry, let me take out this black line so we can understand better. Okay, so this is relative strength indicator. As I told you, it oscillates between the 0 mark here and the 100 mark here above, and above 70 is overbought and below 30 is oversold. 70 and 30 are indicated by these broken lines here. So above 70 is overbought and below 30 is oversold. You could use this as appropriate entry point during your trades. So if you are at this point, let's say on this day, Bitcoin was about $16,000, and it was showing an RSI of 92%, meaning it was massively overbought, and you sold out your position at that point and waited patiently and bought when it was oversold with an RSI of 28%. Bitcoin at $6,000. You would have bought, like, if you had 1 Bitcoin on this day, you buy like about almost 2.8 Bitcoin with the same amount of money on this day. So you can see that the information is always there on the chart to help you identify these good buying and buyout points. Now I want to demonstrate to you divergence. I told you divergence is when a technical indicator indicates the price of a commodity, or when a technical indicator moves in opposite direction to the price of a security. So you can see from this period, the 7th of December, the RSI of Bitcoin started trending downwards. However, from the 7th of December on the price chart, Bitcoin price was still trending higher. It even went all the way to break an all-time high of to hit an all-time high of about $19,300 and above. But from the 7th, on the 7th here it was 16,000 and the RSI started trending downwards. However, it moved from 16,000 to about 19,000. this was clear divergence, and this was showing you that this price of Bitcoin was not going to hold as the movement was losing momentum, or the uptrend was losing momentum, and some traders had started selling out their positions. So when you see such things on the chart, when you see such divergence, you look out for these good buying opportunities and you use them to exit your position or enter good positions. So that's that about volume and relative strength indicators. I believe you've been able to understand them now and their relevance in trading. You can watch the video over and over again to get a good grasp of the subject matter. By the way, I just drew a channel here for Bitcoin with a resistance area at about 11,900 and a support area at about 9,300. You can see that Bitcoin has been respecting this zone for a while now. So let's just keep looking at the chart and see what it will do. I might sell out all my positions of Bitcoin right now because I feel like we are going to go down again to about 9,300 in a few days time before we make any upward movement. Sorry about that. So this is just my channel, and it's by the way, I just drew this channel. That's that. So let me show you the infrastructure based token I was telling you about. So I came across this article and I thought I should share it with you guys. Credit, hunting for the next 100x plus. Icon, Dragon Chain, Neo, EOS, IOTA, VChain, Qtum, Walton Chain, Cardano, they all have one common characteristic, and they are all infrastructure coins which made insane returns during 2017. Today, if you take a look at top 20 coins on CoinMarketCap, almost all of them are infrastructure coins. Finding the next best infrastructure coin is one of the best strategies for maximizing your profits in 2018. More often than not, the great ones have a tendency to reach over 1 billion in market cap during 2017. So crypto investors who are looking for 100x or more gains eventually should understand where they should look at first. The next big infrastructure coins that are at ICO stage or just out of the ICO stage. Blah 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 blah. The guy keeps the writer talks about a lot of things about how Ethereum has not been able to successfully scale, which was evident by the CryptoKitties game. I don't know if you guys were part of the CryptoKitties game, but it really brought a lot of network congestion to Ethereum, and he's trying to compare it with EOS and Credit, which is also a new infrastructure based token. I've recommended EOS a number of times. It's currently trading at about $7 for something cent. I still think it's a good buy for EOS. I see EOS as one of the biggest cryptocurrencies that is going to stand out in the next 3 to 4 years because of its lead developer and what it is offering. So Credit is more like a faster version of Ethereum, and it's currently just finished its ICO. I'm still doing my research on it. I've not been able to find out exchanges where they are trading. I couldn't find it also on CoinMarketCap. So when I get more information about it, I will let you know. But if you find out anything before me, you can inform me on the WhatsApp group or just drop a comment on the video section. So I think you guys should check out Credit. By the way, the author of this Medium article is Acne Crypto, so you can check the guy out if you're interested. By the way, I think it's a good cryptocurrency you should look out for. Infrastructure-based tokens are the future of cryptocurrencies because they create a platform for people to build their own cryptocurrencies. So if you find one at a very good price and one offering to do things such as EOS, Neo, and the rest, which are going to outplay or outweigh Ethereum in the near future, I think it's a good look. So we'll just go back to our PowerPoint slides. Yeah, we are here. So by the way, we've talked about volume and relative strength indicators and their relevance to crypto trading. In our next video, we'll be looking at chart patterns. This is very important. Please guys, don't miss this video. we'll be talking about head and shoulders pattern. We'll be talking about cup and handle patterns, double top, double bottom, and their relevance to crypto trading and how you can use them to be an efficient trader. By the way, our course is holistic. It doesn't focus more on crypto trading. It helps you to build your skills in trading in general, which is a very important skill for everyone to have. Remember, guys, don't forget to like, share, and subscribe. Thank you for watching. It's good to have you guys back, and I look forward to seeing you all soon. Bye for now.